All right, hello everyone, and welcome back to the Financial Summit YouTube channel. We are back for our weekly podcast, the technical analysis charting deep dive with the one and only Mark Wood, an incredible analyst, and I have no idea how he has time to keep an eye on so many charts. Mark, hope you're doing well. You are in the US. You've been traveling between the I guess the Mountain West and Florida and Northeast during this holiday season. I'm pretty much doing the same, and hope you had a good week.
Had a great week. I was up in Breckenridge, Colorado for the last week. I was basically at adult band camp, totally geeking out, totally geeking out, and was running some clinics and performances up there, and doing some sightseeing and hiking, and it was absolutely beautiful up there. That was my third year back at that event, and playing a brass instrument at 10,000 feet. It's not recommended. I I I
Mm.
I've been there 3 years, and this was the easiest year of doing it, but it still wasn't fun. And then coming back to sea level, your lungs are finally able to suck in some oxygen. So the other thing is, for some reason, sleeping is really difficult. Like if you're from the sea level and just park yourself up at 9 or 10,000 feet. I don't know what the science is behind that, but everyone who comes to this event from lower altitudes struggles with that for the week.
All right, so without any further ado, Mark, I did my video this morning. I don't know if you caught my analysis this morning on the channel. I basically stated how I am optimistic, but not because I'm expecting the price of Bitcoin to rise. I am optimistic because the charts are readable. To me, either we will consolidate another 2 to 3 months, creating an incredible buying opportunity off the, let's say, the $68,000 breakout, which should take us into the 90s, or the slightly more likely scenario, over the next 2 months, we crash into the low 50s to upper 40s, creating once again an incredible buying opportunity that should coincide with a weekly MRI buy sometime in mid to late August, along with a critical weekly moving average that's on my chart. That is probably the 50-week moving average sitting down there. Either way, there will be an incredible buying opportunity, and that's what I really like about the charts right now. That's my TLDR without opening my charts. So please check out our 30-minute video this morning with Matt McGregor. This show is all about Mark Woods and his charts. So go for it. Go right into screen share. And
You might
but
have to
after every chart, I might have questions.
you might have to give me screen share.
Oh, I thought I did.
And yeah, I basically agree with that outlook. And it's funny because we're we're saying, well, it's probably going to go sideways, or it could go sideways and down, but in general, it's going up, hopefully by a
Yeah.
lot.
Right.
Right?
No, give screen share a try. I thought that was all set.
Um, Let me see. Oh yeah, hold on. Yeah, it's on. All right,
All
so
right, here we go.
you're seeing my screen now?
I am.
Okay, perfect. All right, so yeah, let me just show you what I'm looking at really quick. I've kind of been away from the charts for the week, but I've been checking in, and it'll be interesting to take a look at kind of the monthly close in traditional markets that we just had, and maybe the 6 month close, which not many people look at, but that's a big one for me. Um, so this is, I'll try to keep this a little bit simple today. We talk about Tyler Jenks's three moving average strategy, and those are all with simple moving averages. I have adapted my own three moving average system, and I can show really quickly. Of course, these are Fibonacci number moving averages I use. The orange, which is sitting at 62,081, is an 8 EMA, the yellow is the 21 EMA, and the green is the 55 EMA. The yellow is at 63, so the green is at 65. So what I'm looking for, this is the daily chart of Bitcoin. Right here on the 23rd of June, you can see we had a major cross. I'll zoom this out. Well, I'll zoom this out a little bit. On daily, this is not like a death cross. On weekly, this is a very, very dangerous cross. I kind of consider this a bull market confirmation, the end of bull market confirmation cross. But we can see here, it's so clear if we just track, I can remove the yellow and the green, and we can just track the short term. Right here, we saw the price fall right through, and then a spike up, rejection, 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 rejection. So basically, this short-term moving average has been resistance since $70,000. And a few days ago, I was like, oh, check this out. We got one close back above the short term. However, with my system, I like to wait for at least 3 closes consecutive, at least. And as you can see, we got one, we got a nice shooting star, and now we've got the price looking to possibly close again. So now I'm not considering this moving average as support. Now, when I add the other 2 moving averages I'm looking at, things become even more clear. This is what I would expect would be a rejection. So if you had taken a long anywhere off of these lows, if you're trading, this move right here up to, let's say, 62,000 would be an initial take profit area, and the yellow moving average for sure would be one. So now let me show you something that I'm looking at, and it's not a popular opinion, but we have a bearish cross below, and this is going back to my EMA SMA system we've talked about, where I'm tracking 2 moving averages of the same denomination. So down here, this is in the 58,000 range. We can see clearly now, this will be fully confirmed by the end of the day, that the 200 EMA has crossed below the 200 SMA on daily. Now, I've watched these moving averages for so many years that even though I'm thinking this is probably the low, I'm not fully convinced of that. It's very, very, very likely that the price is going to come back down here into the 58,000 range. And this rejection here is helping to confirm that for me. And I can show a few examples. And so let's go back to this period that we've been talking about with this consolidation last summer. This is a perfect example, although the moving averages were set up slightly different. But here we have this initial top, a nice drop, another long top. And that, what happens with that long top is it allows the 200 moving average to basically flatten out as the 200 SMA is rising. And sure enough, the price dropped right into that cross strongly. And we can see here after the drop, this is why I love these moving averages. So this is a clear rejection almost to the dollar right there, right in the green moving average. And then we can see right here, this rejection on the purple after this cross. So I am basically, and then we can watch the structure rebuild off of the lows. What we have to look for at that point is closes above the 200 moving average on the daily. We can see 1, 2, 3, 4, 5, 6, 7 attempts, all rejected here in October in the $28,000 range. One more higher low, and finally, now we can look 1, 2, 3, 4, 5 closes back above the 200 moving average. That starts to give confidence. The bots start switching their bias. So now, if we're looking at this today, we have not yet fallen below, but we can see this moving average is, this cross is really trying to pull the price down into it. So now if I just isolate this cross and get rid of these moving averages, we can kind of look back in history to see how effective this cross is. I really have only found one period in history where the price did not get pulled down into this cross. So here's the 65K top, the initial top. Right here, we had a nice rebuilding of the structure. The 200, this was a perfect buying opportunity right here. And it was the halving, coinciding with a daily golden cross with the 55 and the 200. But right here, as you can see, the purple wanting to cross back above, this is setting the structure up to be trending strong again. So this drop at 8,000 down to 8,000 was perfect. Now we can see here, as the 200 EMA has remained below, it's not going to be support on tests. It's just much less likely. So basically what that tells us now is any drop into 58K is going to be less and less likely to be support once this moving average has dropped below it, as we can see what happened right here. So it's very important. This price range in the 58,000 still remains very relevant, and it's very important that it holds a support. But I can show a few more examples. Right here, we have the moving average crossing down. And then here's there's two examples after the 20K top. You have right here on March 15th in 2018. Once again, the price just continues to get pulled into this cross, and then we can see a clear rejection right here. So now this is confirming the 200 daily is full resistance at $10,000. This was kind of like your final chance to exit that market completely after that major bull run. And then once again, we just look for the 200 moving average to become support again. And it was not support all the way down after the 3,000 lows. And here was a chance right here in November 2018, right before the collapse. If the price had somehow been able to track above the area of this moving average cross, which would have been at around 7,000, we could have potentially avoided this capitulation. But this is exactly what you look for coming off of lows. You look for the 200 EMA to cross back above, closes above, and there we go. So this is probably the biggest thing that I'm currently watching on the price of Bitcoin, and I will show you the
Hey, Mark, your internet's cutting out.
uh,
Mark, I think it's your internet. I think mine is okay. I haven't seen any disruption on my end, but
let me try
you may
something.
want to reset. All right. So while Mark is looking to reset his internet, let's get some confirmation from the live viewers. Do you guys hear me okay? Maybe I go to my screen share. Oh, Mark, you're back. I see you moving.
Yeah.
All right. So let me
Yes.
just comment real quick in that.
Yes, go ahead.
And I've been noticing the same thing, especially on my 4-day chart, my allocation chart. If Bitcoin didn't have the 4-year halving cycle, all TA is pointing to the beginning of a prolonged bear market. But we know that can't happen in this 4-year cycle. So instead of anticipating a prolonged bear market with this kind of TA, it is likely to either be a COVID-style massive crash incoming, or a short-term scare. So either way, I'm expecting prices to be back above 65,000 and never looking back by late September, early October at the latest. But until then, everything is pointing to a multi-year bear market, but we know that can't happen right now.
No, there are too many. There are too many bullish indications that are just. I am still feeling fairly confident that what is going on with the price is the most similar to this long period that it took to get back above 1200 all-time high. This took May, July, September, November, January. This took months to figure out. And just to kind of give some credence to your what your idea, because this has actually kind of been my long-term idea since this candle closed in March right here. This told me, this is the 2-month chart. We just have a new candle on the 2-month chart. This last candle did not close quite as bearish, but it still was giving us more of like topping sideways consolidation information. And this moving average has risen. It is now up to $50,000. This is the short term. And this is the moving average that we want to see hold for the most part. In 2016, we can see so many wicks off of this. January 2016.
Ah, Mark, losing you again. You're breaking up.
Still breaking up.
Okay, you're back.
Yeah, I don't know what's going on. So to have the price drop into the 50Ks would not be abnormal. It happened. It tagged the short-term moving average so many times that now dropping below this moving average, if we see a month close below, if we just look at history, this is the simplest bull market, bear market indication I have found. One close below, bull market confirmed, over. One close below in May 2018, bull market confirmed to be over. Here is one exception. However, we saw this capitulation down in the COVID. This was a warning right here. This closed below. Even from this drop that was the 65K all the way down to 28K, it still held closes above the orange until after the 69K, and that confirmed the bull market was over. So I'm seeing 50,000 right now as a very, very important bull market, bear market divider zone.
Hey, Mark, which moving average is that?
So this is the Fibonacci number 8 EMA, and it's super effective on high time frames. Can
you go back? Can you go back to the 2-month chart for a second? How do you explain the red candle at the end of 23 that closed below at the end of 23?
Oh, right here.
Yes. How do you navigate that? I know the moving average is still going down, but you had 2 closes above.
Yes. And usually on something as high as 2-month, 2 closes above is enough. You do not need 3 closes above. And this was an area, if we just look at the moving average structure during this period, this is the summer period, it was on the verge of reversing one more time. It was very, very close. So this is a bit of an anomaly, and it was very hard to navigate, but there were other things I was watching at the time that was basically keeping me bullish, cautiously bullish, right? So yes, I totally agree with you. And Tone, check this out. Yeah.
Oh, wait, before you move on. So to me, now that I look at it, it's very similar to the close below that same moving average in early 2020, the one you mentioned earlier. And the And I know you're taking it that the COVID crash, but the COVID crash should have never happened, right? So, because that was an artificial government shutdown. So, to me, what I like about this chart is um, it that a new high was never made. So you should have never been like, to me, that's not a signal of a new bear market because there wasn't a new bull market. There wasn't a new all-time high. So by that metric, that red candle in July of 23 that closed below the moving average should have never really been anticipated to be a bear market because there was never a new all-time high made. Now we have made a new all-time high, barely. To me, this is still a double top. Now, on a 2-month chart or a 3-month chart, this is the double top. On a shorter time frame, the double top took place within the single year of 21. But on this chart, this is the double top right now. So it's debatable whether we have or have not made a new all-time high. And I think that now that this average is at a new all-time high, I think a significantly higher price needs to be made. And then the moment we close below that moving average, it's time to just, uh, just disappear for like a year and a half.
That is a really great way of looking at it, and I totally agree. Like some people believe that this was a new bull market, the bottom of the COVID crash. But I just think that that the bull market that took price to 69K began here at 3,000.
I agree.
Yeah, I think that this was just a continuation. This was, yes, of course, we had the COVID black swan, but as we mentioned many times before, if the price had just followed a natural trajectory, right? If I get a brush on here, I probably have drawings. Instead of having this massive rise up there, if we had just seen the price slowly climb up to the moving average, it would have been right where it capitulated to in 2020. So this was just a case of the price rising too high, no support, and crashing back down. But this was a natural, and then this, of course, this was if we follow a natural trajectory, we would have probably seen the price at around $6,000, right here in March 2020.
Right. The big rise in April, and I was doing videos with Tyler Jenks at that time. That move didn't feel natural to us. In hindsight, it was a giant Ponzi scheme called Plus
Plus token,
Token
plus
that
token.
dragged it up. But at the time, we didn't know, right? Uh, in fact, the reason why most of us know about Plus Token is because Richard Hart got wrecked on Plus Token, and then started the whole hex scam. So, but yeah,
So Tone, this is something I mentioned a few weeks back, and this is kind of more information slash proof of our theories that yes, we might see a nice drop and it could get significant, but it's this cross that I mentioned here that took place on the 3-week, and we just got this confirmation a few candles ago. And I've showed this before in January 2017. We saw this cross, and after the cross, there was a drop from 1,300 down to 894. That was one of those big 35% drops in the bull market. And here in 2020, we got this cross. In December, the price was around 28,000, and that cross put price all the way to 65. So we just got this cross fresh. It's a fresh cross, and we can see this short-term moving average is getting a lot of pressure. And I would not be surprised to see something similar to here, where, because in my opinion, we still have this rise off of 15,000 up to 70,000. It was too fast, in my opinion. It was a lot of it, around 40,000 was the hype of the of the ETFs, and then that caused a spike in the price. So if we look back at 2016 at this structure, it was so clean. This one moving average, again, it's the 8 EMA, just held every single close. Through once this low, bear market low, was established, and we got the moving average crossed back above the 55, and it just kept trending up. It held every close perfectly because of these 30%, 40% tests. That's what kept the bull market healthy. So right now, it's a little bit concerning because we've got this sideways consolidation and a close below 60,700, and this candle closes in 5 days. So I will definitely be watching the price. So then this is what I do in this situation. So let's say we get a close there. Well, I know where my levels are that I will be looking for. I'll be looking for the 13. So this gray that I just added is the 13 EMA, and the yellow is the 21. Now, here's something interesting. The 21 moving average, 21 EMA, sits right at 49,142, and it will rise on this close right into that 50,000 area. And we can see here off of the 65 top that was the absolute final straw support. And there were even wicks below there, but this drop all the way off of 65K down to 28K held closes the entire time. So what was it that kind of warned us that the bull market was over? Right here. One close. We're on 3 week. We just need one close. But you can see one close below, two closes below, three closes below. That begins to establish this as resistance. This was your final chance to exit the market at 48,000. We had this nice bull trap right up here. So, and if we look back, if I go back to the 2016 market, we can see that there were a couple of dips down into the yellow and down into the gray below. So this basically tells us that anything 50,000 down to 50,000 is still not going to fully threaten the bull market structure. Ultimately, we would still like to just see, I would just still like to see more sideways, keep this low at 56,000, get a higher low somewhere around here. But I totally agree with you that by September, no matter where the price is, I think that by September, the lows of the year are going to be in. And this cross right here is something telling us to just trust the structure. And you know, if we go back to a halvings chart, hold on a second, we can see that what's taking place is completely normal. I showed this, I think, on our first stream. And so currently, if I zoom in to where we are right now, we are 70 days post halving, about 70 days after the halving. And looking back here, this is the last halving. We had about, let's see, really this was 150 days before the price actually did anything of substance post halving. And back in the 2016 halving, I can put a date range, like here's the high, and then basically there was a drop and a long consolidation. It took 168 days to get back to that prior all-time high. So having the price range sideways and drop, you know, if I time this out 150, let's just call it 155 days. Here we are, just what you and I are saying, Tone, September. So whatever's happening here, I'm still just seeing as normal post-halving consolidation, confusion, boringness. get people to stop paying attention to Bitcoin. It's dead. The halving and the ETFs were not successful, and then all of a sudden we are going to see a parabolic rise that I'm timing, just roughly timing into September 2025, a little bit earlier than before. And that comes from just kind of taking an average. What I mentioned on the first stream, this right here is timing uh, tops after the halving. It took 518 days after the 2016 halving. It took 530 days after the 2020 halving. So just kind of averaging that out, I'm looking at a high, and I am still targeting kind of this range right here at 150, and I still think that might be conservative. What do you think about that, Tone?
Yeah, I agree, but we don't know when it's going to break out, right? So the later it breaks out, the later we will get the top. And this 3-month window is important. Now, if we break out around September, then yeah, where you have your line 1 year later is likely to be the top. But if we don't break out until December, it's very likely that the bull market is going to last longer. So, however, if we break out next month, we're probably going to top sooner and at a lower price. So it's this dynamic where the more we struggle now, the longer and higher the bull market will be. And the earlier we go to 100K, the sooner and lower the ultimate top will be before a serious correction.
Yeah, I totally agree. I follow Bob Lucas on Twitter and on YouTube, and he's just a cycle master. He understands these 60-day cycles, these 4-year cycles, these 16-year cycles, 20-year cycles. And early on, he was very concerned about what he would call a left translated cycle, meaning rising to a top too soon at a much lower price than expected. So, as frustrating as it might be to just see the price moving sideways and even dropping, um, it it is actually increasing the chances of something more substantial into 2025. And this is a much needed consolidation. And check this out. If we go back, we talked about this on the last stream. So here we are. I'm tracking the hash ribbon buy signal. So we're on a secondary capitulation. We're on a second capitulation of the miners post halving. I think initially they fared quite well because they had the price rise to all-time high, but now some of the smaller miners are probably struggling with this price. I think I want to say 59,000 is a price range that people are considering fair value as far as where the miners are able to remain profitable. And some of the smaller miners probably need the price to be significantly higher than that. And so we can see this, the secondary drop. So I'm going to be waiting for this moving average. These are hash power moving averages right here, right? So we're looking for this lower moving average to eventually cross back up. It's probably going to be a while. And once that happens, it will print a buy signal, as we can see here. And we can kind of go back and look at these quickly. Sometimes this is not anything to trade off of because often once the hash ribbons, and we can see here, this was a minor, this was a small capitulation for the miners. And even still, this is July 20th, 2023. The buy signal didn't come till August, almost a month later. So we're probably not going to see a buy signal from this until maybe September. It might actually be as late as September. However, I think that is going to be a significant signal to pay attention to. And I'll show really quickly why I just like to pay attention to this indicator. So here is the buy signal right here. And you can see if you try to trade this, we saw an immediate drop from 29,000 to 25,000. So terrible, terrible buy signal. However, the lows were in right here at 24,000. So the probability of the price dropping below the prior daily swing low after the buy signal, it's very, very low. It basically means this is it. And anything down in that area is going to be an area to consider buying, which let's just say we just took the buy signal at 29,100 and held through this mess. Well, that buy signal took the price from 29,000 all the way up to 60, 75,000. So here is the buy signal off of the bear market. This one was pretty good. However, if we're looking at it, if we're zooming in, we can see the buy signal came here, and the daily lows could be interpreted a couple ways. 16,000, or maybe we could call this the swing low. So right here is a shakeout. This kind of breaks the rule of thinking, well, the low is in, because we got one more shakeout. However, if you just bought here and started dollar cost averaging in, forget about trading, just dollar cost average, you actually would have gotten a nice entry, basically between the price of 20 of, well, basically around 20,000. You probably would have an average entry of around 21,000, which would have taken you all the way up to at least 32,000 before some kind of a significant drop. This is the one false signal, and it took place in August 2022, August 19th. The buy signal came with the price at 20,000. The swing low was 17.5, and we had one capitulation below there. I wouldn't call it so much a failed buy signal, but it kind of was, because this is a pretty big percentage drop from this signal down to the bear market. It was a
Yeah,
20.
FTX had a lot to do with that.
That was a 25% drop. So you're right. But just going back, it's a great indication. Here, I'll show two more and then we'll jump off of this idea. So this one came December 2020 at around 16,000, helped take the price up to 65,000. This one came at around 42,000. The swing low was 37,000. That held. Another drop down to 39,000. So it's very common to have the price drop below where the buy signal was printed. But in general, it is something worth following, in my opinion. So I'm going to continue to track this. It's basically saying Bitcoin is sideways, Bitcoin is consolidating, and don't expect anything major to be happening anytime soon. So that's about it on that.
All right, hey Mark, we do have a good question from the live chat, and also let's finish on Bitcoin. I want you to pull up S&P, NDX, Nvidia, and Tesla.
Okay.
And very, very interesting charts on all of them. And the question from the live chat from Crispin is, are these hash-driven charts only good on the 1 day, or do you also pay attention to them on other time frames?
They don't change. They don't change at all. It doesn't matter what the time frame is. It's basically, I just switched from daily. Let's see what the 12-hour looks like. I liked watching them on 12-hour for a long time. But it doesn't really matter. It's such a, what would the word be? It's more of like something to get your attention. So if it happens, like let's say we have it on the 4 hour, and we get a reversal on the 4 hour, well, you still might have to wait for the daily. I would say, I guess the best way to answer it is the higher the time frame, the better. I would at least use 12-hour or daily for this. Hopefully that
All right.
answers that question.
Sounds good. So if you don't have anything critical on Bitcoin, let's move on to traditional markets.
Yeah, I don't really have anything too critical. Okay, so oh, really quick. Yes, let me just show one more thing. So once again, the main thing that I am looking for to set off the next leg of hopefully what will be a very strong bull market is, I can just remove these moving averages. Actually, this is a simple look, is one close above the top 2-month Bollinger Band. That's all that I'm looking for. So currently that has to be $71,400. There's not very many examples to choose from, but we can see in the bull market of 2016, 2017, this was it. It's nice close above. It still took 2 or 3 candles to consolidate, but that basically sent the price from 900 to 20K. This close above was at 29,000 and the price doubled from there. So 70,000, let's say, let's hope we get another doubling of the price at 71,000. We would be looking, right in that $150,000 range. So until as long as the price is being held by this 8 EMA at 50,000 and below the top Bollinger Band on the 2-month chart, we're just consolidating. We're just kind of like trying to set the structure up. So let's take a look now at S&P. And I can kind of keep the same look on there. So we can see how with the S&P, this idea translates perfectly. Right here in January, we've got a close above the top Bollinger Band after a squeeze. Like this doesn't look like a squeeze because it's but on something like a 2-month chart, that's a squeeze. So when you see that close above, that's telling us this bull market is ready to expand. And we've seen the price move from 5,000 to 5,500. That's
Hey, Mark, can you put an MRI on that?
Yeah.
Oh boy. Oh boy. And we have a monthly MRI top as well right now this month.
Yep.
Or is it this week?
Um,
Oh, it's a warning on the monthly, and it's actually an MRI top on the weekly.
yeah. So in cases like this, like I'm not super concerned by that right now because the RSI, on the monthly for the S&P is at 70. Like that is just starting to get into a bullish zone. Now there is, let's see, I can probably extend this. I absolutely love patterns on RSI. I think sometimes it is even more, it is more reliable than patterns on price. So this is something to be watching right here. We could get a rejection at 70 to come back and test the moving average of the RSI. However, this does not call for looking anything like a significant market top. In fact, I would imagine once 70 is broken, we should see the RSI trending significantly stronger along with price. Now let's just see where the RSI is on the 2-month chart. Yeah, so it's just getting kind of into the bullish zone. It's right around 69. I don't really need that. And this is, I mean, basically, this is a moving average. This is an EMA off of the RSI. And a simple way to look at it on high time frames is is the moving average curled up, RSI above it, we're generally bullish. So you are right, Tone. I mean, it is coming into somewhat of a topping scenario, but I don't expect it to be a major significant market top, because now here's another thing to pay attention to. The 2 month closed. I'll turn the MRI off again. This last we've got this last candle, the 2 month candle here closed above the top band, and so you just remain bullish. That basically is suggesting we will see at least one more higher high, somewhere above 5,500, in this candle or perhaps the next candle. And if we look at the quarterly, we are seeing the price. What does the MRI look like on quarterly? Oh, right there. Look at that. So what does tell me how you interpret this, Tone?
Very bullish.
Yes. Right?
Is that blue line from the MRI or is that
Yes.
yours?
That's an MRI.
Okay, very bullish, especially if we break that line. But the next MRI top here is coming, right? It's what, 3 candles away, maybe?
Yes. Yes. So check this out. If I'll turn this off. So one of the things that drives me crazy is when I see something like this, where it's very clear to see, I'm going back to 2012. This is going way back, but it's very clear to see that the price was basing nicely off of this moving average and then began to rise above it. So you're like, okay, well, if you're looking for moving average support, where is it? And that's where I go to what I would call my short term, which is the 3 EMA. And I can almost guarantee, yep, that's it right there. So this is where the price is going to base between the top Bollinger Band and the orange. It's going to be the 3 EMA, and we can see that taking place now. So we don't really look for any kind of significant correction in the S&P until the price is back below 53.25. Closes below there are just keeping us bullish for the top Bollinger Band. And let's just see what the 6 month looked like. Bullish. So 6 month.
The MRI here is amazing on the 6-month charts. One of my favorite charts.
Right there. So the 6 month chart closed above the top band. And we can go back to 2013 when that happened. We saw 2 more higher highs before a bit of a consolidation. Again, we saw 2 more higher highs here in July 2020. So this is a suggestion. I don't think it's crazy to look for the S&P to be trending up to this zone right here.
No, it's not. And if you go back to the 1980s, or sorry, the 1990s, you can see the 4 consecutive MRI tops and how we accelerate after number 3.
Yes, 1, 2, 3.
And right now, it's looking very much like number 3.
And number 4 called the top.
Right. And right now, it's looking a lot like that 3rd.
Yes, I agree. Real quick, we talked about this on the last stream. Let's just take a look at the 6 month chart on Bitcoin. So let me get rid of the MRI real quick, and even the Bollinger Bands. I actually didn't notice this. I was just looking at the chart, but the Bollinger Bands are going to give us a nice bit of information. But here we are in Bitcoin. This is the highest 6 month close in history. And I just don't see anything at all bearish about that. And with the MRI, when will we get a green star? Um, once the price is above,
Correct.
well, once
Yeah.
once the swing high, once this all-time
Yes.
high is taken out,
Yes.
it's going to accelerate significantly, in my opinion.
I think so. So this is a 6-month chart, correct?
Correct.
And
There's
we
not
still have five, oh, and it just started.
It just started. Now, I didn't notice this, but not only did it give us an all-time high close, but I mean, there's not a lot of history or information on Bollinger Bands, but the TA, the analysis still works the same. Where we got a close above the top band on the 6-month chart, it is suggesting we are going to see a significant higher high down the road. And right
Hey,
here,
Mark, you're using Bitstamp, right? You can get another year's worth of data if you use the index.
here's the index. So here is one really good example of where this signal fails, but this is a good way to understand how the Bollinger Bands work. So right
But,
here,
but it's debatable if it fails, right? Because it never even touched the middle band.
right. However, what I look for is right here in 2019, when you get a close above the top band, your bias remains up. Your bias remains to have this wick taken out within one or two candles, and the next candle closed red. So now here's how you this is how you I interpret the Bollinger Bands. So now I'm like, okay, well, this might be a potential top. It's not confirmed yet until on a 6-month chart, we could basically say almost just taking out the low. And we can see what happened on the 6-month chart. As soon as the 6-month low, not even the swing low, but just the open, let's call it the open at 7,100 collapsed, we saw an immediate capitulation. And I wonder if it would probably be the 34. Let's just see. Where is it? No, not 34. I'm trying to see which moving average. I know which moving average caught that on different time frames. Anyways, let's go back to S&P. We can take a look at the Dow.
Right. So you're looking at the super macro side, right? And I agree with you. Now, but if you go to weekly and daily, I think we're in for a bit of a correction here.
Well, if we go back to so here we are on weekly. This is back to S&P weekly, right? MRI is telling us to pay attention. But if we look, we're still above. So this last candle looks a little toppy, would you not say, right here?
Oh, very, very toppy. And honestly, I think the only thing holding up the S&P right now is the fact that the monthly still has another month to kind of tick up there.
Yeah.
Because
I
the
would,
monthly is about to get into a really in a pickle here with the MRI. And the 2-month is already on the MRI, but the 2-month, uh, yeah, the two month has already kind of topped. The 1-month is there. Um, the big stocks like Nvidia has topped, but now Tesla's pumping, so holding up the shebang here. But and if you look at NASDAQ, if you flip to the weekly NASDAQ, you're having a very similar situation where I really think that even though it's the prior candle, the prior two candles that should have already reversed us, it's like it's running on fumes right now. I think it's ready to reverse later this week after the holiday. Maybe people are pumped for the 4th of July. The markets are going to be closed on Thursday. I really think the markets are gonna top sometime in the next week.
well, here's a bit of a trend line. This is NASDAQ weekly. So this is something to watch, just to see if this RSI trends into this trend line and maybe a rejection, and we could see a nice correction that's going to come down and test this moving average. So I
Yeah,
don't.
see, I don't think it's gonna go up that high. In order for the RSI to go into that trend line, we would, rally quite a bit here in order to do
Well,
that.
it could actually trend up with the price. So look, we've got these two candles, the last two weekly candles. I agree with you, Tone. I think that these two wicks are going to be very difficult to take out. I think the price is going to try to trend sideways and eventually top and come down. Now, there is something happening under the hood that is very bullish on NASDAQ. Let me get rid of the MRI. So one of the things that I look for is when you have the yellow 21 crossing above the middle Bollinger Band, which I have set at 18 SMA. So now we can look back here. We've got this cross in December 2023. Now, yes, we got one close above the band that keeps your bias up, and then a nice correction, but you can see the orange just held the price all the way up. So we can look back anytime you're pulling the 21 back above the middle Bollinger Band, you're setting the momentum to continue up. So this is suggesting, I would say that in the next week or two, we might see this cross. And at that point, your dip zone is the orange moving average. And it's bullish. It should be a buy the dip scenario, even if we are correcting off of the monthly or the 2-month MRI tops. This cross is going to happen. I don't see any way it doesn't. And we can just see, back throughout history that when you, right, like for instance, right here, this is digging out of the 2020 bear market. Let me make it a little less confusing. Digging out of the 2020 bear market, right here, we got the yellow 21 crossing back above the middle Bollinger Band, and the orange held all the way up to the top band. And at that point, you're looking for the middle band to be support. This drop was enough to pull the yellow back below, and part of my system, part of my rule is when the yellow 21 gets pulled below the middle band, it's going to get tested. And you might see one more nice strong bounce, but we can see this was a perfect buy the dip right there. Yeah. Now, had this week, 2 or 3 weeks closed below the yellow here in 2020 in November, we could have seen the market take a severe turnaround. So this is just a super bullish structure that is getting ready to get set up, even though we might see some drop off of here. And
Right. Okay. So let me. No, wait. No. Don't go off the chart yet. So all that could be true. Remember, we are macro bullish. What I'm saying is there's a very high probability that the price is going to collapse into that crossover, right? So my low end is the prior swing high, which happens to be where the crossover is taking place. I'm just saying a little bit higher than that even, right?
right.
I'm just saying that we are due for a correction to that, which is still significant. It's like 15%.
Yes. I'm not discounting that
Right.
at all.
Again, and I'm going to steal screen share for a second, and because I want to look it up on my side because I was curious. So I'm going to steal it away for a minute,
Sure.
and I want to show my biggest case for this crash. Again, I'm not saying there is like a 2008 style bear market collapse coming. I'm just saying we have a very high probability of a 10% correction on the S&P over
Yeah.
the rest of and NASDAQ, especially the NASDAQ. And my biggest for this is actually the CMF. I know you're not a big CMF user, but we can see that right here, this is very troublesome. Massive uh, massive divergence
Yeah.
within the CMF as the price is rallied significantly higher with a serious drop in CMF.
Yes.
Now, you can see it in a smaller way right here where the price went up. This is back in 2021. And the CMF, while it didn't go down a lot, it still went down very, very slightly. It was very subtle. But again, it was subtle. And then it was like falling off the cliff. Right here, this was actually absolutely beautiful. While the price of NASDAQ slightly reset by a mere 20, by the same mere 10%,
Yes.
a very minor 10% drop, 11% drop in the price. Look at the cratering that happened in the CMF. It was a total disaster. Flew into the red. And this right now is a bit of a preview. I would love to see the CMF go down to a similar level on a mere 8% correction, completely resetting the entire structure. And it's happening in line with an MRI top.
So Tone, one thing that's interesting about that, I don't disagree with you at all. In fact, like that actually, your scenario is exactly what I would anticipate to be happening in an election year. When we went back and looked at election year cycles and patterns, I showed several examples of the stock market topping in September of the election year. Um, and it's not uncommon to see a nice 10% correction leading into the election. So this is
Right,
actually
and in addition, it would actually favor the current administration because, based on the last debate, they didn't do very well. And as the election is rolling around, the more likely it is that Trump is going to win the election, the more incentivized the Biden administration is in crashing the market into the election in order to get that final scare, that final month of campaigning for the Democrats saying, are you seeing what's happening to the market? Expect this for the next 4 years because the market is scared that Trump is going to destroy the world. So it actually acts in their favor to crash the market going into the election, blaming it all on people supporting Trump.
well that's just what I call pre-election fuckery. Like we will, and this is exactly why people exit the market in September, because that's kind of like the last bit of insanity where the news media is whipping up the frenzy, and you know everyone is ready for the world to end. And so people just de-risk. They're going to ride they're going to ride the S&P for as long as they can into the election, and then they are going to just exit for a while and just let the dust settle. And if I can find, hold on, if I can find my election, here it is. So
You need to
I
screen share.
yeah. Um, and here's something interesting with Bitcoin. This is another a bit of kind of like fundamental information, which I think you and I rarely rely on, but to suggest that we might not see anything fun or exciting or interesting until at least after September. But here is, so right here, let me zoom in on this. This is Bitcoin typically tops in August of the election year. I mean, we do not have very many examples to choose from, but it just seems to be a really repeatable pattern. So this is August 2012, prior to Obama's second election. And we had a nice top at 1529. That's crazy to say. And a pretty good drop down to $10. That's a pretty strong um, That's a pretty strong correction. Let's see what that turns out to be. Wrong one.
50%.
Yeah, yeah. But the point being, top is in August, sideways, drop, scare, off we go. And then here is into Trump's election. This is the month of June, right here. The top was in June. And once again, there was a nice correction here of, let's see, 35%. That was a correction from $770 down to about 482. And then the election of Trump, we saw a top again in
I mean,
August.
Biden, the election of Biden.
Yeah, sorry, of Biden. We saw.
Well, we all know who really got elected, but we have Biden.
All right, now, so here we are. We have a top in August. We have a 20% drop. And by October into the election. So my theory is exit the markets. I'm not saying exit Bitcoin. I'm just saying the pattern that I've seen is Bitcoin tops June through August. The stock market typically tops August, September. And people just get out, they de-risk, they wait for the insanity to end, and they start dipping their toes back in the water around late October. So here we are. This was a very early top for this particular election, to have seen it in April. And I do not expect we are going to see a top prior to the election. I just don't think we're going to see a new all-time high before November. But I could be wrong. But I do think that this sideways, this consolidation is going to be over by the end of September into October. And even if we're let's just go crazy. Let's put ugly old goats scenario in, where we get kind of like a move here, and into the election we're getting some kind of capitulation into the 40s, and then it could take a couple months to dig out of that, but I still believe that early 2025 is going to see something significant like that. So I'm just not seeing anything out of the ordinary as far as what's happening in the markets and what's happening, what would be expected pre-election. But I can show you really quickly, right here. Let me get rid of some of this. So we are, if we look back at the last election of Biden, if I'm right here, here's the election where the green line is. The market topped in September 1. And what was this correction? Basically
4%.
10%.
Oh, 10%. Wow.
Right there. And then here is
Bigger than I expected.
here's the election prior. Let me take the MRI off real quick.
No, leave it. It's not really done anyway. That's okay. Doesn't matter.
So here we are, top in August, and we have a drop of 4%, small drop, but still showing a top in August, September, prior to the election. Here's this last election, top in September, and very, very small drop of probably another 4%, something like that. Yeah, 4 or 5%. We can call it 6%. And we'll go back one more election cycle. This is, where are we now? So leading into Bush's second cycle, again, we have a top in, this one was early in March, but still we can see that the most we got out of a correction in this election year was 8.5%. So going back to what you were saying, this is kind of showing us that what you were talking about is very viable, where we're going to see maybe a little bit more ranging, but I do think that by September, I've got an arrow here. That wasn't for price, just for timing, trying to time a top. And let's just put a 10% correction on this in September-ish. Right here takes it back to 5,000. That's a perfect post-election reset to continue on with what the high 2-month, 3-month, 6-month timeframes are telling me that we are not seeing anything extraordinary. What do you think of that, Tone?
Couldn't agree more.
What's that?
Completely agree.
Excellent. You know, I think you have a very similar trend here. I just find this. This is not regarding elections. This is just talking about where the S&P is. This literally was a great reset. The stock market crash of 1929 is 85%, and that started this trend line that has lasted for 100 years, catching the lows. And right here, this is I guess we would consider this the .com boom. Just showed how powerful that was as price broke out. This top trend line began to form in 1930, and it held all the way to 1994. It held for 60 years. And for the majority of the time since then, the S&P has been above that top trend line. And what I am anticipating, and this is not, I don't know timing. I think that whenever this last gasp is over a few years from now, I think the price is going to go back to this bottom trend line.
I'm not.
Now I'm saying this.
I don't know about that. I mean, the only
Or
way that's happening is with a massive blow off top. I mean, we are talking. Yeah, we have to go above 10K.
oh yeah, I'm not. I think that the S&P is going to double in price above 5,000, and
Oh
maybe
yeah, at least, yeah, minimum.
yeah. And I'm not calling for it to happen at this timing. I think it might be a few years down the road, but I do think that there is a potential for at least a move to get back here. Now, let's just see how crazy it is. There it is right there. There's that 80% stock
Yeah,
market reset.
yeah, I think so too. But I also think that
What?
one of the reasons why it will happen is not because major companies like Amazon and Google will go bankrupt. I think it'll happen because these companies will no longer be on the US stock market because there will no longer be a US.
Just speculative timing. What timing are you thinking? I don't think there's a lot of time left. I don't know how much farther into 2030 this.
Somewhere between 2029 and 2032.
Yeah, that's kind of where I have this right here, about right here. And dropping back down to this inside of this bottom trend line would kind of get that full reset that you would need. So
I
real
mean,
quick,
there will be states, they just won't be united.
um, it would be the divided states of America.
Yeah.
There was one thing that was interesting on Tesla. I think I have it on this chart.
And some of them are gonna, recreate the American flag as a nice rainbow flag, and I wish them the best.
Oh, look at this. I love this. So a few weeks ago, I sent a message to a friend of mine because he's been investing in Tesla. And I was like, okay, so I'm not convinced the lows are in, but I think it might be time to like start dipping your toes in. And I have this marked because I sent this to him. Let me change the color. When I sent him this message, um, the price was oh, the price was around in this area right here. And there was this odd diamond pattern that I was watching, and it was really ugly. But I was just like, hey, I can, let's check this out. Now, this doesn't fit this perfectly because I think I had it drawn differently, but it was ugly. However, once I saw the price and the moving average start to trend above here, I was thinking that this low consolidation was in. And since then, now, wow, the price is really, this has been a strong week. It's 30% above. So now, Tone, do you recognize this? This is a super bullish pattern right here. Mega.
Yeah, but
No,
it's
I'm not talking
it's
about this. I'm talking about this. It's very common to see the price dip back down into the mid range and then just break out.
yeah, but I don't think it's gonna just break out. I think it's gonna have a decent pullback first, and by decent pullback, I think the low is in, but I think we're gonna backtest, the 175 area.
175.
I think we're gonna close the gap from yesterday, from the last week. I think that
Oh,
gap's gonna close.
which gap are you talking about? Right
Both
here?
of them, both of them, yeah.
That's 182. Yeah, well, it's possible. It's possible. It's possible to come right back up here, um, set one more higher low. But let's just take a look. Let's take a look at Tesla's. I haven't looked at Tesla's monthly close to see what to look at there. Um, okay, so I wouldn't be surprised. I wouldn't be surprised to see the price trending up here into the 277. I don't know. This is looking pretty strong. Let's see. Okay, here you go. There's a good resistance point on the 2-month chart. And we can see that since Tesla hit these again, we can see the yellow moving average as the price is rolling over. We can see the yellow moving average pulling below the middle Bollinger Band, and it just pulls the price right into it. And the middle Bollinger Band has not been able to be picked up as support. We got one close above, two closes above, crash below. So this 239 area, just from this look, I see could be maybe a place where the price stops and comes back down one more time.
Right. And Mark, we do have to speed this up. We only have
Yep.
Nvidia to look at. And keep in mind, we can't look at Tesla in isolation, right? If both of us are potentially anticipating the S&P and the NASDAQ to pull back 5 to 10% over the next 3 to 6 months, Tesla is not gonna buck the trend. It's already bucking the trend with its announcements. It's not gonna continue doing that forever.
Do you think it's possible? Look, this is a nice reversal candle right here.
Sure,
This,
and I'm not saying we're gonna break the lows. I'm just saying we're gonna close that gap.
yeah, no, I don't disagree. Let me see if I can find something. Oh wow, look at that. That's that. So this candle is closing today. The
Yeah.
three-day candle is closing. Now, where do you say the gap is, Tone?
Well, this is the 3-day chart. The 3-day chart doesn't really have one.
Right. Oh, there
Um,
it is. Right there. 209.
well, no, I think we're going lower than that. I think if
Yes.
you go to, I think we're gonna go into the 170s.
Here's the gap right here. This is a big one, 197. And
I think
here's,
we're going there, right there, right. I think that gap is closing.
yeah, it's possible. But currently, so this is something
Though,
interesting.
though, though that's not really a gap because remember it pulled back during that candle.
Yes. Here during this candle.
Correct.
Yeah. So that basically was filled.
Right. No,
This,
I mean, I'm just using the term gap fill very, very loosely.
I got you.
Um,
I got you.
if you look at the weekly chart, I just think that we have gone up way too far. And on a weekly chart, I'm just ballparking it here. I think we're coming back down to the prior swing high. And the prior swing high was in that 170 area.
Right around
Well, the the red body that
right here.
swung up in April.
Okay. So
April.
in April. This swing high?
Right, but the body. I think we're going
Oh,
back
okay.
to test that body.
Got you. Somewhere in here. Well,
Yeah.
that would be so. This is a very bullish cross on the weekly right here. Potentially, it failed. If I turn these off, we can see it failed right here. However, this one looks pretty good. This where this cross is, and any wicks below, I would consider to be a potential buy zone. So this is, man, Tesla's just been really really tricky to trade. But look, based on just this candle close today, this 3-day candle close, this is super bullish. Um, where's that? What is the MRI? Green Star. Like that's just saying stay in, right?
Right, but if you go to the 1 day,
Right here.
right, I didn't think we would go up this much in 2 days, right? I really thought we would rally. I really thought it would top before getting to 225, but I didn't think it would go up that quickly. And remember, the quicker things go up, the crazier they come down. So the MRI daily top is coming on Monday, I think.
So check this out, Tone. This is part of the reason
All right,
that
we do have to move on to Nvidia, Mark. We're already an hour and a half in, so we
okay.
gotta speed this up here.
All right. So this is one of the reasons, though, that we are seeing this volatility right here. This band, this was a very, very tight Bollinger Band squeeze, especially on something as high as 2-day. We can see a similar squeeze here back in 2024. And as soon as the price started closing below, it expanded significantly to the downside. So once you get this candle closing above the top band after a squeeze, this is not anything out of the ordinary. But I do agree this is going to probably correct and come back down. And Nvidia is right here. I still have Nvidia on this linear scale chart, and I kind of adjusted this trend line a little bit to the new information. I mean, I could have it like this, but I don't like how these candles are ignored right here. So this drop that is taking place is making a little bit more sense. I could maybe kind of fudge it to there. So definitely has topped. However, Tone, um, if I take these drawings off, I was looking at Nvidia, and I was thinking that it might be done, but the higher time frames are suggesting it's going higher. This 2-month candle close, that is mega bullish. We do have MRI. We've got extension A, C, and B, right?
Mm-hmm. Yeah.
However, we got a close above the top band, and so my bias is still going to until we see a candle close inside of 113 and a red candle body. And also, if I add that short, I don't have it on this chart.
Yeah, and I think we're gonna get that this month. I think Nvidia is going to at least 106, possibly 95.
Yes, but I'm seeing it trend higher still. I don't
Oh no,
like
no, again, Mark, I'm not saying Nvidia has topped for the lifetime of the company.
yeah.
I'm in line. All these markets, uh, a 10% correction for the S&P is like a 35% correction in Nvidia, right? Like I'm not saying Nvidia has hit its hyperwave and it's going back to $8. I am looking for a serious correction down to as low as $95 in Nvidia.
So how do you interpret this last monthly close right here?
Very weak.
Yeah, I agree.
Uh,
It still did close above the top band, but there's more wick above than candle body below. And I think it's going to be very hard for Nvidia to take out this swing high. However, okay, this actually supports exactly what you're saying, Tone. So we can see whenever you have a close above the top band, this far above, it's very common to come down and test that area. So here is your 100 zone right there, Tone, sitting at the top of the band. But this 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 is a green 4 on the 6-month chart. So a drop to 99 or 100 and then continuing straight on up to new highs is probably what we're looking at with Nvidia. Is that kind of what you're seeing, Tone?
Yeah, yeah.
Yeah.
And let me steal screen share for NVIDIA real quick because I don't have time to dig into this stuff on the morning show because it's a very short show and our focus is Bitcoin. So once again, you can see it in the CMF. You can see how the price went significantly higher. Like this is not at all debatable. And the CMF had started to trend lower and has now fallen significantly. And the CMF needs to reset. We got lucky back in 2023 where the CMF reset into the red while the price consolidated. I don't think we're going to get a chance this time. I think this time the CMF will reset into the red as the price drops towards its prior swing high. And you can even see it here, right, as the price of Nvidia is rising in its final push right here. The price is rising in its final push. The CMF is at best holding steady. And even right here in its actual real final push, like this,
Yeah,
you can see that the CMF is going down while the price is trending higher.
yeah,
That is a problem. Now,
yeah,
Nvidia got lucky in that it consolidated while the CMF cratered.
yes.
This time around, it went up a hell of a lot more with a declining CMF. And I think the CMF is going into the red. The question is, uh, what will the price do? I think the price is coming down, and 106 is my low end target. Sorry, high end low target.
And Tone, you on your chart, if you go down to your RSI, you can draw the same divergence, the same bearish
Correct.
divergence
Yes.
with a lower high on the RSI and yeah, right there. Yeah.
Right.
Yeah. So it seems
And
like
this is not subtle. I mean, this
no,
is an absolute monster run up with only the MACD confirming it. But the MACD is moving average based. It's obviously going to confirm it.
yes. Now you can have divergence in place, but it doesn't really confirm until a top is put in. But I do think maybe a top has been put in.
So do
And,
I. I
and
I absolutely assume the top has been put in, considering it topped on the MRI weekly and daily and monthly.
yeah. And so that
Also, I'm sorry,
99,
the daily was avoided by the catastrophe that took place 2 days before it. But there was supposed to be a daily inside a weekly inside a monthly, but uh, some people pre-ran the signals by a day or two.
which was probably smart. It was getting hot. So I think what we've determined here is I was zooming out a little bit farther, just looking at like the 2-month and the quarterly and the 6-month, which are still suggesting bullish, but your analysis is more on weekly and monthly, and you're seeing signs of topping, which we go back into that election cycle psychology, and there's not much gas left in the tank for the S&P. Like I think we've got a run in July, a little bit a chance to go a little bit higher in July, not necessarily for Nvidia, and maybe start topping in August, and then just wait and see what happens.
And
But
and also while the MRI missed its top by a couple of days, extension C did hit on the day of the top. And extension C, if those of you that follow Tom DeMark's system, that's the combo 13.
mhm,
At least it's very similar to the combo 13. So Tom DeMark would have absolutely nailed this because for Tom DeMark's trading, to him, the combo 13 is even more important than his TD tops. So this would have been, again, it's fucked up that I missed it, but I should not have.
yeah, that you had extension A and C.
And B is one candle off. We can still get an extension B uh, if we close above here. But yeah, we can still get an extension B. The next uptick will get us an extension B.
Okay. Yeah, that's interesting. All
All
right,
right,
so
Mark, we got to wrap this up.
yep, I'm good. I'm good to go too.
All right, guys, thank you so much for watching. Please check out the financialsummit.com website for our next event in the Maldives. Hopefully, Mark will be able to make it out to the Maldives as well. And please subscribe. Please follow us on all the social media. And I'll see you all tomorrow for the morning show with Matt McGregor.
Later.
Later, Mark. Bye, guys.
Bye, Tone. Have fun. What's the temperature up there, by the way?
Oh, it's nice. It's like